What up traders, what up investors, Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. Today, I know you're feeling the pain. It's not even halfway through the day. It's a little almost to lunchtime at 12 p.m. here on East Coast, and we were down well over 2% on SPY. Of course, we're going to be looking at some Wall Street bets losses, like extraordinary losses. And again, especially on these very choppy markets, it's very difficult to be trading this. Again, what I'm telling the folks on my Discord and the members tab on Patreon and so forth is like, I'm just sitting on my hands and just playing very defensively and not really taking any large positions in the short term, maybe buying some opportunities down the road. But as of this week, it's just been way too choppy for myself and have not really added anything to my overall positions. But some of the stocks we're going to be talking about today that could be setting up in the next coming days or weeks for some potential buying opportunities, especially for a little bit more longer dated opportunities. So that being said, without further ado, let's go ahead and just flippy floppy over to the extreme losses here. So we have this user Smash7709. You can zoom in here on his account. His year-to-date market value is down $180,000. Of course, his live account value is only 24. So he's literally taking a pretty large haircut in this account. Again, it doesn't describe on what he's overall has been traded, but he's going all in. He says on SPY 275 puts, and of course QQQ puts expiring 11/20. So again, that is the November monthly's expiration. Basically saying he's saying that if it drops next week, puts March and May or Logic, most stuff will be going from there. So looking for, again, someone just going completely YOLO and just going completely short for the remaining balance of his account. So we'll say a Godspeed to him. Next one, we have Nick Change ATC1. This is, again, he took a big fat L on basically looking at a play in eBay for earnings. Of course, we'll look here in the chart in a second, and we can flip-flop to that on looking at the chart and where there could be some support and resistance going down. But again, dropping well over 50% of his account to $35,000 loss on YOLO play. Again, everyone knows with YOLO plays, especially with earnings, they are, guess what, a coin flip. And holding into earnings is very, very disasterly. And you can just get crushed and so forth. This guy, this is actually a little bit of an older post. Dean Success is he's accidentally ordered 215K of Tesla shares by putting in the limit price in the share quantity, and I decided to hold. Here's my lost fund. So basically, this was just a couple days ago when Tesla was trading around 410, 412. You can see that he's already down $26,000 at that limit. Of course, Tesla is down today, I believe, to like 390, 385 in that zone. So whoa. That guy's definitely be feeling the pain, basically ranching his up to nearly 50K loss. And then last but not least, we have another guy who was doing a YOLO play into earnings. Again, fully disclosure, do not do YOLO plays into earnings. Again, the 1 out of 10 times, it's fantastic, especially with that IV crush goes the other direction. That being said, going YOLO on UPS, which is a great run company, and longer term opportunities is fantastic once we look at the chart. But this thing looks was just absolutely just crushed here. Poor guy or gal. B&W WS45. Godspeed to you, my friend. That being said, without further ado, let's go ahead and flippy floppy to the charts. So again, here we looked at SPY. We're kind of holding this pattern here, and again, what we talked about previously. Especially when we're looking at the /ES. We talked about this holding pattern, potentially holding this pattern here today. But again, next week is the start of the clown show, and anything can go in any which direction. So just get ready. Definitely buckle up, and it's going to be pretty sure a choppy ride. And if you're not comfortable doing, just sit on your hands. Like, there's nothing, you don't have to be in the market at every second point of the day. So without further ado, let's go ahead and look at those eBay earnings loss individuals got. You can see here, of course, eBay with a again, we're not going to diagnose the full quarter on the fundamental side, but on the charting side, it's coming right down to the 200 EMA here, which could be some potential support here. But that being said, with the overall market continuously going down, this is not going to help eBay at all. Looking for basically the 5 and 8 that crossed through the 21, and we're seeing the 5 and 8 moving averages aggressively pointing to the ground. So this is again suggesting more downfall. We are seeing a lot of volume coming in due to the earnings call. We've seen this movie before, but now this overall trend was going up. It was trending sideways, and we're still kind of going sideways, but if we start getting closing below the 200 EMA here, that could be a sign of concern, especially if we start getting some of the moving averages aggressively pointing to the downward side. So that being said, we broke that low here. So again, this trend is really looking to potentially start going to the downward trend here. But again, with the overall market really just kind of swishbuckling us around, it's going to be very hard to find a particular trend due to the choppy and the very aggressive movement that we're seeing in the overall market. Now we're going to go jump to Tesla. Let's just ticker symbol TSLA. Of course, this one got hit like everything else today. It's down well over 6% here. We're seeing some 385. We talked about this being some generic support for earnings as well. We actually talked about some support coming around 370. Again, this has been a switch. It has been kind of trading sideways for a couple days, but now since it's broken below the parabolic SAR dots, we're now seeing that negative movement coming in. As you can see, the 5 and 8 moving averages aren't as aggressively pointing down like on eBay. They're kind of slightly sloping down. So this is, again, it's not going to be taking on too much water. This could just be trading sideways here a little bit, but definitely if we start seeing it break below 370, that would be a sign of concern without a doubt. Longer term, potentially even coming back down to 350 to even 335. So be very careful out there. And again, remember to buckle up. And last but not least, we're going to look at UPS. This again was also a YOLO earnings play, which you got to be so careful with these. As you can see, it's still kind of the same pattern. It's well below the 250-day, well below the 55, but it's nowhere near the 200 EMA. With this very negative downward movement on earnings, it's kind of finding somewhat of a base here from these Fibonacci extensions here around the 160 range. But if this 160 range doesn't really hold, we could potentially see it come all the way down to below 150. If this wants to start trading sideways, aka the 5 and 8 moving average start curling upwards and kind of just more or less going parallel with the longer dated moving averages and basically the time frame, we could definitely see this potentially start bottoming here. Of course, there was a lot of great news on UPS. It was just a concern about the ongoing markets, of course, with the increased volatility and a lot of the underlying stuff. So before I let you go, let's go look at some key takeaways what we're talking about. I'm not want to scare anyone or anything like that. Again, you do not have to be in this market. Like if you just want to just take it easy and just take the week off, you don't want to look at it. I know that's super difficult. I usually don't do very well in these very high volatility times. So just take it easy. Don't trade large sizes. Don't make any emotional decisions, especially. Key takeaway, do not take emotional bets or trades or anything kind of that, because that will ruin your account, and then it just ruins your whole day, and it could ruin your month. It could ruin your year. So before I let you go, let's go look at some key takeaways we're going to be looking at here again. We want to be looking at trends. We like to find trends going up, going down. As you can see, the overall market hit this top up here. So we can kind of get rid of some of these lines here to kind of address that. So we're going to be looking again. We hit that top. Now we're just kind of been trading sideways. So we're kind of really kind of staying in this rectangle here. So kind of give you a better picture, that's what we're looking at right here. We had the trend going higher. We had that swoosh buckling around due to the pandemic, came all the way down. Now just trending all the way up. Now we're in chop mode. So now we're looking on potentially hitting a double bottom here, or we can hit a double bottom, come back up, and then come back down. The different variants of what can happen is endless. But that being said, if we start seeing a trend to the downside, that's going to be breaking below that $3,200 level here on the S&P 500 on the future side. That could be definitely meaning some significant further downside. That being said, anything can happen in the market. And again, looking for some potential bottoming motion here. We talked about that little oval here, potentially being a short-term bottom. Again, not showing any significant sign because we are seeing that 200 EMA come in around that 3,200 range. That's going to be a key level support, which we saw previously bounce twice here, and now it's been moving higher ever since then. So be very mindful of that. Honestly, my opinion on the fact, if you had to put a gun to my head, is basically I would like for this to potentially hold. I don't like to make predictions. I'm more of a longer term investor, and of course, more on the long side of things. I don't do well shorting, but definitely looking for this to potentially hold. If this doesn't hold, we could see some substantially further downside. But if this does hold, and the trend can continue, that'd be fantastic for this bull here. Again, guys, thank you so much for watching, and please don't forget to like and subscribe. This is Ken from the Dyslexic Investor. Peace.